Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I am Jeff Barton, and this is The Mortgage Voice. Welcome to the show. Thanks for listening. Hey, check out the Mortgage Voice podcast on Apple Podcasts. We are blasting on Apple Podcasts, Google Music Play, wherever the fine podcasts are heard. They're all over, and anybody who's anybody is riding around now. Instead of listening to certain radio programs, you listen to what you want, and they're usually on a podcast. We've got one. It's on each and every week, and we want you to tune in. And if you tune in, leave a review. We really helps other people, helps us find the show for you. So I really appreciate that. We're also on YouTube. We shoot this for TV as well as some of the radio stations carry a feed. And it is on YouTube. Jeff Barton, The Mortgage Voice. That's our YouTube channel. And click on the bell. Get notified each and every week of the new show that's out. And that will get it done for you. Also, check us out, website, www.themortgagevoice.com. We had some interesting things go on this week, and everybody in America is now familiar with the term coronavirus, and how is it helping or affecting what goes on in the housing industry as well as in the mortgage industry, and it is affecting it. It's quite unbelievable in terms of what's happening to the rates. But I also wanted to talk to Dr. Jeannie Bertoli. She's going to come on the show today and talk to us about the psychological advantages, disadvantages, and how you can kind of get yourself out of the funk or the constant wearing and washing and whatever else you're doing to try to avoid this. Really, it's not as deadly as some of the current flu epidemics that are going around, and everybody is wondering about whether that even makes a difference if we've got something new that we really can't control. And I understand people in this panic, but I wanted to ask Dr. Bertoli on about how to handle your psychological issues with it so that you can focus on things that are really going to help you in the long term. What's that? The rates are low. How can I get into a house, or should I refinance my house? So refocusing away from fear into something that's positive and can help you out. That's why I wanted to have her on the show today. And she joins us later on in the hour. Couple things also in the news. The stock market, obviously anybody who is in the stock market, and Daryl, how many people do you think percentage-wise are in the stock market in the U.S.?
Well, a lot less for personal stocks than there used to be. There probably are a lot of 401ks that are based on funds that use the market itself to move up and down, but individual stocks, not so much.
Yeah, about 50% of the people in America are in stock market. So to some of us, it's really important. And I say some of us because it is important to me. I do have a lot of my personal money in there as well as corporate money that I've invested through Malibu Funding over the years. So it's important to me. Although with 50% of the people not really caring, the fact that the market goes up and down is more of a psychological, and we talked about it about 3 or 4 weeks ago on the show. Psychology in real estate is really, really important. My house is great. I've done a lot to it, and it's terrific. Doesn't sell as well as, hey, we better get in on the market now because prices are going up. That's psychological because you don't really know about the prices, but if you're thinking they're going up, you probably want to get into something now. That's the difference between a personal opinion and the psychology of the market in general. And those things that are affecting us currently are this coronavirus that's going around and the stock market going up and down. So how does it affect markets? How does it affect the way you're going to purchase, the way you're going to refinance? And what is the actual fact of the mortgage market? Let's talk about it right now. I'm going to quote some rates here that we haven't seen, and the article says since 2011, and I beg to differ. I think never is the better term. These rates are something to behold. These, again, are average rates that we quote here on the show each and every week. They're taken from a website called the Mortgage News Daily, and you can go there. They have a lot of great articles. Most of them are industry related, but certainly anyone can read them and understand what's going on, especially if we're talking about market volatility, which we are. It's on the downside right now in terms of the stock market, but in the mortgage rates, it's really on the downside. Let me quote you. 30-year fixed rate, 3.0% to 3.25%. Now that is, okay, most people want this gold, right? This 30-year fixed rate loan. You just want that. Why? Because you know what your payment is today. You know what it's going to be in 3 years, 5 years, 17 years. It's just, people love that rate. So if you can get a 3% rate on a 30-year fixed, that is smoking. That is beyond anything that I've seen ever. Even though the article says 2011, I think it's ever. I don't care what they say. Let's talk about the FHA rates. Get this. 2.75 to 3%. Okay. Now I know the mortgage insurance premium, what you have to pay on top of that is 1.75. So the actual rate is quite a bit higher. But still, you are coming in with 3%, 3.5% down, and you have barely anything in the game. And in some counties and states, you can get what they call a down payment assistance program. We talk about it on the show all the time. In California, we've got the Chenoa program and we've got CalHFA, 2 down payment assistance ways that you can augment your 3.5% on an FHA loan. Let's say you come in with 0.5% on a $500,000 loan. How much is that? What's 0.5% on what's 1% on $500,000? It's $5,000. So let's say you're all in at $2,500 for a $500,000 loan at 3%. Come on, that's free money. If you're out there struggling to try to figure out how you're going to afford something, you can afford this. Trust me when I tell you, because at 2% simple interest on $1 million, it's $20,000 a year. Half that, $10,000 a year divided by 12. Well, you figure it out. A $500,000 loan is going to cost you in the range of, I don't know, $1,000 to $1,500, all things depending. Principal, interest, taxes, and insurance, all that. That's pretty amazing. I mean, you're not going to see it again. And I've said this, oh my gosh, so many times, but this has got to be the end of it. What are we going to do? Have the bank give me money in order to get a loan? Because that's what it's coming to. If we go below 0% in terms of what the banks are lending out to member banks on the short-term window, what the Fed calls the Fed funds rate, we talked about that last week or the week before, how they cut their prime interest rate 0.5 point. That's where we're heading. If you read any financial news and you're seeing how the effects of the coronavirus is somehow affecting the stock market or the economy, the ball of wax, the whole shebang, whatever you want to say, is really tenuous. But this rate on the 30-year, on the FHA, unbelievable. 15-year fixed, again, 2.75%. So let's say you bought the house 18 months ago at 4.5%. And whatever you're paying, if you go to a 15-year at 2.75%, you're probably going to pay pretty close to the same principal and yet be done with the loan in 15 years. That's amazing. The same principal, interest, tax, and insurance payment you're paying today is going to pay for what your old loan was at 4.5% 18 months ago. Why wouldn't you refi? This is why 11.1 million people are currently in the pool of people who could refi and benefit from the refi. Now, in the old days, it used to be 0.5 point, right? If you benefited by 0.5 point, i.e., 50 basis points, in terms of what you were going to pay on that loan, it was worth doing. Now they won't even. Now it's 0.75 point on all these scenarios of those 11.1 million people. It's really incredible, really, really incredible. And of course, the ARMs, you can't, by the way, it used to be that the ARMs were lower than the fixed rates and the 15-year was lower than the 30-year. Well, all of these rates really are bottoming out here at 2.75%. And who can get lower than 2.75%? You probably could, but if you are a regular borrower, somebody who's working, somebody who's got a paycheck each and every week, somebody who can afford a down payment. And again, as I said, there are down payments as low as, with down payment assistance programs, low as 0.5 point. And I even think there's 3 different loan assistance programs in California which you might be able to get away with paying nothing. The line is always open, and you can always, call us at Malibu Funding, who sponsors the show. Appreciate what they do each and every week. Anyway, I'm Jeff Barton. Exciting show today. I want to get to it ASAP, and we are The Mortgage Voice. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show. We are on a number of different stations. We're very excited about what we're doing with the show. There seems to be a terrific need for updated information because what's happening out there changes all the time. And if you've been awake this last week, you will know exactly what I'm talking about. Anyway, check us out. We're on Mortgage Voice Podcasts on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. Subscribe for free. Never miss an episode. Please leave us a review. It helps other people find the show. It's just better. We're also on YouTube, Jeff Barton at themortgagevoice.com. And subscribe to our channel. Click on the bell, and every time there's a new show that comes out, you will get a notification from that bell, wherever a new episode is available. Check us out on our website, www.themortgagevoice.com. And again, I'm Jeff Barton, and thank you very much for listening. So in talking a little bit off air, we had some interesting dialogue and talk about families and how families communicate with one another. I want to have on the show, as I had said earlier, Dr. Bertoli, who's going to talk to us about this communication between family members when we are in stressful situations, i.e., let's say the stock market goes down 2,000 points in a day. And that may happen. Or let's say there's a weird and strange sickness going around that's killing people and nobody seems to know why. That could happen too. So these kind of stresses which we are experiencing, and I got to tell you, Daryl, do you remember anything kind of like this before in this 1-2 whammy that's been happening?
Yeah, there have been some times in the past where things have gotten really weird weather-wise over the country. I mean, certainly the tornadoes and
that's true.
Disease, and we've had Legionnaires back.
That's
a long
true
time
too.
ago.
We did have that weird Legionnaires things, and
there's been some other things that have been interesting, exciting, and disruptive, but not as bad as people let on as they were going to be.
Yeah, and that's a good point to make about the coronavirus. There will be a vaccine. It is not as bad as the current flu. These are all truisms. The scary thing is that there is no vaccine now. So people are freaked because there's no way to protect themselves other than stay the heck away from other people, right? And I don't know if that's a strategy in most of our lives. Not for me, it's not.
Well, it is for some people because
Yes.
the planes flying are virtually empty right now.
Empty.
Empty, and a lot of stuff is getting canceled that's got group activity associated with it. A lot of stuff.
I was scheduled to do the Los Angeles Marathon. I was going to run that. My wife did not want me to run. I mean, and anybody out there who has a relationship knows exactly what I'm talking about. Either they're the person who has something that's very important that the partner needs to do or not do, or they themselves are the ones who need to not do or do. And that was me.
I think the big objection probably is you taking on the risk for both of you guys.
Well, right. That's what I told her. I said, I don't care so much about me, and I think most guys are like that. They just, okay, I'll tough it out, whatever. But I don't want to bring something into our house that could be of harm to her, and I totally get that. And I told her, I said, look, just put me in the bedroom and slide the food, in the door.
Well, I mean, if something actually took you out based on that, her life would become extremely complicated.
Yeah, well, that I wouldn't even have thought of that. Wouldn't even have crossed my mind. This is much like when we had the fires out here. My first thought was, how can I help other people? It wasn't like, how can I take my wife and my family and go and protect them and ourselves? That it's just the way I think. I don't know why, and I think there are some people like that, and most of them are, in a home somewhere. But anyway, okay, so
sounds like a Jonathan Winters routine.
Yeah, exactly. Those of you out there who don't know Jonathan Winters, look him up on YouTube. Funny man.
He's definitely there.
Funny man. Okay, so all that aside, what is going on in the mortgage place. The mortgage marketplace is terrific. The real estate looks a little bit more attractive because of the lower rates, and that's good. But I want to talk some about solar. We talk a lot about solar on the show because I am a great believer in it. I purchased it for my house, but I have a naysayer, someone who has pointed out to me economically that it just doesn't make sense for many, many people. And he pointed it out to me in a way by which it was a dollars and cents thing, not necessarily better for the environment thing, right? And that's always a, I don't know, it trips up accountants when you start to talk about benefits other than financial, meaning that if I am not contributing to air pollution, let's say, by driving an electric car, or I'm making my own power, therefore the demand for them to burn more oil is less. Now, it's obviously a lot smaller than you would like it to be, but I read a statistic that said that in California, there were 1 million homes in 2018 that had solar, and in 2019, there's 2 million homes. So if the trend continues, and I think there's almost 40 million people in California so there's probably a good percentage of homes out there, 20, 30 million homes in California, let's say, who could benefit from solar. And if California in and of itself is a solar producing state, this is good, for everybody. Now, much like the virus and people staying home, if, in fact, we convert to solar, there are problems because industries which depend on oil, whether you are driving the truck to the gas station to fill up the gas pumps with oil, or whether you are selling the oil that keeps the engine in that truck from going, or a million other oil-based products, if that becomes less of a demand because solar is so much more prevalent, those people who are employed in that area, they're going to lose their jobs. So therefore, what happens when you want to get solar, and this is why the economic equation does not make sense for most people, and why I think the Stephen Jobs of the solar industry has not yet appeared. What we have currently is a way by which everybody can make money, but not necessarily what's best for the economy, what's best for people here in California, who we get sun all day long. So for us out here, it's a good idea because it's cheap, it's free. I put the panels on my house, and why can't I reduce my bill or have no bill? So in trying to decide whether it's good for you, you need to first find somebody you can trust. Now, in the solar business, there are a lot of people who will sell you solar, and they're all over California. And I talked to, probably when we were researching it, 5 different companies. They all had a pitch. The greatest pitch is, we can do it right now. The second greatest pitch is, we're not the best. I mean, we're the best, we're just not the cheapest. And I'm always a believer that you get what you pay for, and that's an old salesperson's approach, whether they're selling you garbage or whether they're selling you actually the best product. But I think the best always costs more, and if you can pay a little bit more, that's a good thing. But in this equation, to figure out whether you can pay for solar over a certain number of years and to have the solar that you pay for up front make sense, is the government's intervention by saying, we will give you a rebate, or we will give you dollar for dollar off your taxes, or whatever they incentivize you to be able to choose solar as the option to be able to power your house. The other thing is this relationship you have with your power company and how you have to sell power back to them so they can write you a check or take it off your bill is a model that makes no sense to me. There should be a better way, i.e., you either buy from them or you sell from them, but you don't have to give to them to get it rebated back to you and also buy for them. That seems to me like when you're charged a tax of sorts, where you basically get the money, then you have to pay the tax, then they give you a rebate at the end of the year because you paid too much tax. It's like our current tax system works. Why wouldn't it make more sense not to do that and keep the money and only pay them the difference of what you owed them? I don't understand it other than they get to keep the carry while you get to wait for your money. It's like that in solar. I think there needs to be the Simon Bolivar of the solar world or the Stephen Jobs of the solar world out there to really bring us into a productive and cheap way that solar can be available for everybody. I think there's a way to solve the homeless crisis with smaller homes and solar-driven energy for the needs of that particular home. I think all of these things are within our reach, and we need to really think creatively to start being able to help rather than just make people a buck. It's not always about that, is it? Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Check out the Mortgage Voice podcast on Apple Podcasts, Google Music Play, wherever fine podcasts are heard. Subscribe for free and never miss an episode. And hey, leave us a review. It really helps other people find the show. It's really important to us and to you. More people listen to the show. The more people listen, the more stations we're on, and the message gets out there. Hey, we're also on YouTube, Jeff Barton, The Mortgage Voice. Subscribe to the channel. Click on the bell that updates you each and every week when there's a new show, and there is one each and every week. And also we have our website, www.themortgagevoice.com. Again, I'm Jeff Barton. We're on several stations here in Las Vegas, Nevada. Really appreciate you listening, and want to get right to our next guest who's been on the show but hasn't been on in a while. This is Dr. Jeannie Bartoli. I want to have her on the show. Jeannie, how are you?
Hey, Jeff. So great to hear from you.
So great to hear from you as well. I always appreciate the fact that you're available. I know you're really, really busy, and I do appreciate you coming on. So again, thanks very much.
It is my pleasure.
Okay, so the world, what's happening? How do we refocus? What's the emotional strain on families and people when they're going through events that are highly hyped, some not as I guess, predominant or dangerous as others, but they're both very concerning, whether it be the drop in the stock market of thousands of points or whether it be the coronavirus, which seems to be haunting us each and every day. We see a count, a place where it is. I just saw this thing up in New Rochelle, New York. How do people in families deal with it and to try to continue to live on each and every day?
So here's how I think to handle it. I believe emotions are here to get our attention. So if you are afraid, if you are frightened, whatever the emotion is that you're feeling, to breathe that in and to know that now it has your attention. So what you want to do is make a plan. If it's the coronavirus, make a plan for your family, for your safety, so that you can check that box. You can know that your family is safe with your plan, and then you can move on to the things that matter, that are associated with your long-term goals. But to manage that emotion, to breathe it in and make a plan to handle it is kind of the ultimate that you just have to do so that it doesn't plague you. As you go to sleep, it's not eating at you. Or the stock market going up and down. And it's not just down, it's up, it's down. It's
Right.
really unpredictable. You breathe it in, and then you make a plan and say, okay, this is the reality. It's up, it's down. I don't know which way it's going to go.
Right.
What does that mean for us as a family?
Okay. Now, for your own self, can you share a little bit a personal story about how maybe you've done some things around in your life to be able to either prepare for one or plan for another?
Sure. Well, for me, security is very important.
Mm-hmm.
Because I'm single and because I don't have, family money or anything, I'm responsible for me. And it's very important to me to live a simple and safe and secure life. So the way I do that is, one is I create multiple streams of income so that any one thing can drop off and I'm still fine. And I don't have to worry and I don't have to panic, whether it's the stock market or anything else. I also invest in things, as you know, that include real estate, things that aren't as unpredictable.
Right.
And then I mean, really the multiple streams of income is the way I create security. In terms of the coronavirus and any kind of virus like that, for me, it's super important, again, because I'm really into safety and security, to put a plan in action that includes, stopping shaking hands. Everybody around me has stopped shaking hands.
Right.
It's just being willing to stand for your plan and what matters to your family. And for me, that brings peace.
Right.
Because I am in charge of that.
That's the point I think I want to make, is how does someone regain control over a situation that seems out of control?
Exactly. And that's how you do it. Instead of getting caught in the emotion, utilize that emotion that now has your attention to say, okay, now I need to do something, put your plan in place. That's how emotions and logic really work hand in hand.
Mm-hmm.
I love that about it. People think of themselves as either emotional or logical.
That's true.
And really, neither one is it's not a binary choice. They work together so well, and they're both critically important in your life.
Yeah, that's very interesting. And I also happen to agree with you. And I am one of these people that always looks at someone as either, they're too emotional or they're too linear. They're too logical. There's never like this balance. But what you're suggesting here is that the freak out part of you can really aid in the plan part of you to come to some peace at whatever the plan is.
Absolutely. People who are too extreme, people who are too emotional can just be in that emotion, right? They can be hyper emotional, and then they aren't thinking through, okay, now that this is going on, how do I want to handle it? And people who are too logical aren't considering the impact on other people, aren't considering all the emotions of others going on around them. And they are probably suppressing their own emotions because we are not purely logical.
Right.
Nobody is.
No, exactly. And you wouldn't be a human being if only way you thought was that way. I mean, those people really don't exist. They may shove down the emotion, but somewhere in there is the emotion of the moment, whatever it can be, and whatever triggers it, whether it be, like you say, the stock market or this coronavirus or whatever it's going to be next time, because there's going to be a next time, right?
You're right. And it can be it can be job insecurity, it can be food insecurity, it can be so many different things. So I say, embrace your emotions. And I will say, there are too many men out there who have looked down on women who have been labeled as overly emotional, which is factually inaccurate, because men's emotions are really limited often to anger. And they label and say, you're too emotional, you're overly emotional. I would suggest we stop doing that.
Mm-hmm.
Instead saying, what is bothering you? What do you need from me? And that's how we can deal with each other better, rather than labeling and judging.
It's funny, and I could personally attest to what you just said being absolutely true, because in my own life, I too have had those same discussions. And this is just recently not running the Los Angeles Marathon, right? It's really a nothing either way, one way or the other. But it was something I wanted to do. But at this particular moment when my wife was not happy that I was running because she was afraid for both herself, myself, and, our family, just to take that in, make a different decision than I normally would. It turned out fine. I can always run my own marathon. I really don't have to run the Los Angeles Marathon. You know what I mean? And I think...
But this is really important, Jeff.
Right.
We need to be asking each other, having a little more compassion for each other. Mm-hmm. We need to level up on that. Asking, what do you need from me? Why is this important to you? What do you wish I was saying or doing? These are 4 simple questions I just gave you. Mm-hmm. But if we ask our coworker or our boss or our spouse or our children these kinds of questions, instead of lecturing at, judging, and labeling, we would change the world.
No, that's a powerful statement, and certainly in a situation where we're dealing with really people who are freaking out because of the coronavirus, whether it's, on a spinning out of control kind of way, or whether it's just, this is the reality. People are dying and they don't have a vaccine. The ability to be able to control that with simply asking another human being what's best for them in this moment and how can I help, provide that, as opposed to, hey, toughen up, or it doesn't really exist. I mean, those kind of ways to deal with a problem are just adding to the problem, my opinion.
They just are simply not helpful.
Right. That's right.
You want to talk about logic? Don't do what doesn't work. And that doesn't work.
Hey, listen, we have about a minute left. I want to ask you personally again about your own investment strategies on real estate. How are things going? I know you've been really buying and selling the entire country. So tell us where you are today.
Well, I'm super excited. Because I just got a HELOC for the first time in my life, a home equity line of credit.
Yep.
So I paid off my place in Florida. This my home, my primary home.
Congratulations.
And so I got a HELOC on that home, and for the first time, I have this amount of money that I can play around with, creating new investment opportunities, new lines of income. So I feel like I really got it right for me in terms of safety and security, and so I'm super excited about my new HELOC. I can't tell enough people, get it in, get it done. It's safe and secure. Great,
excellent. Any news on the book front? You writing anything? You doing anything there?
I am finishing something up, and I'll be happy to tell you about it next time.
Excellent. Thank you. You know what? There will be a next time. I always appreciate you coming on the show. And if you want to shout out your phone number or wait for somebody to get in touch with you about what we've been talking about today in the show, I'd appreciate that too.
Absolutely. My phone number is 727-262-4271, or you can reach me at drbertoli.com.
Jeannie, thank you very much. And once again, I appreciate you coming on.
Thanks, Jeff.
Okay, and thank you. That's Dr. Jeannie Bertoli. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. We are on a bunch of podcasts. We're on the Apple Podcasts, Google Music Play, a bunch of fine podcasts heard all over the place. If you go to any of these, you can subscribe for free, leave us a review. It helps other people find where we are, and we're trying to get the message out of what we do on the show, which is to try to help you figure out what you're doing in your finances for your mortgage and trying to buy a house. We bring to the show many different types of guests, and what we try to do is give you a perspective on people who've been there or trying to get there. This next guest who has been on the show before is Deborah Shard, a former LPGA champion, been on the tour for 20 years, recently written a book, and I am really happy. I've read some of the book, not all of it. I apologize for that, Deb. Trust, Understanding My Why, and joining us is Deborah Shard. Deb, how are you?
I'm doing fantastic, Jeff. It's great to be with you today.
It's great for you to be on the show. We were just talking about some of the things you've been doing and some of the opportunities that the book, writing the book, has allowed you to be, I guess, introduced to a different world and to be able to come at it not only with your professional experience and your championship experience from the pro sports world, but now that you're an author, it adds to an already terrific package and opens some new doors. Tell us about that a little.
Yeah, it's been really interesting, Jeff. I keep recreating myself.
Mm-hmm.
I realize that as I keep talking about this more and more and more. And while I've been on the journey, I don't know that I would have been saying that all along the way.
Right.
But when I have to stop and reflect about it, it's like, yes, I am continually adding to the journey, adding more dimension to it, adding more depth to it. And certainly writing the book was a first for me.
Mm-hmm.
It was something that I had wanted to do for a very long time. And I had played around with writing the book for many, many years. And it's funny, like most other things in my life, whether it was playing the tour or building nonprofits or a lot of the other things that I've done or building my own business, that it finally hit me. It was time to write the book.
Mm-hmm.
And so I shut everything down. And I took the time and let's just do it. And I enjoyed the process so much. It certainly put me to your point of the question, that it put me in a world that's totally unknown world to me.
Mm-hmm.
And it's been so much fun seeing how this process works, from everything from writing the book to having a reflective writing partner to make the book better, to
mm-hmm.
getting the book edited and printed and getting it out there. And it was such a big high when the book finally printed and I had it in my hands, and I went, wow, I did this.
It's amazing.
It was a real cool moment. It was like winning the USAM all over again. I was like, God, I did this. So it's really been a lot of fun. It's been fun talking to people about it. It's had really positive reviews from
Yep.
people from all walks of life, because it really expands to a universe so far beyond golf, even though golf was my learning lab, and how I developed so many of the ideas and thoughts and traits and skills and everything else through the game of golf. They all translate to everybody else's life. And for me, it was putting it down on paper, sharing meaningful relationships from great coaches to great mentors to all these great influencers who were in my life, and how I was able to take the greatness in them and do something with it. And that's a very special gift it is a special message in the book that you have this opportunity to meet special people all the time. A, you have to be willing to let them in. And B, when someone's offering you the opportunity to learn from them, embrace it. Because you never know where it's going to lead you. And I had people come into my life that totally transformed the trajectory of my life, because when I started working with Ron Schmetterman, who became the man who taught me the game of golf, prior to meeting him, golf meant nothing to me. I had no aspiration about it. I had no dream about it. I had no desire about it. My knowledge about the game of golf was next to zero. And then I had this amazing person come in my life who wanted to take me under his wing and teach me the game, because he had a passion for it. And because of him, I fell in love with it. And I lived a dream that we both shared by him teaching me this. That's kind of been the story of my life, and that was the drive to write the book, that meaningful relationships are really what life is all about. And in this age of technology, a lot of kids are skipping those steps of how do you build meaningful relationships. And I hope the book is a guide about that. How do you format these relationships that get so far beyond the surface? And go ahead.
No, I'm sorry. I'm fascinated by what you're saying, because in many teaching, I guess, relationships, there's a resentment somehow, either with the teacher or the student. But to hear you talk openly about accepting people into your life who would generously give you the information that was theirs, and they did it in a loving way, that is such an example. My question is, how did that happen? Was it just a gift? Was it something that you just inherently knew how to do? Because I know that teachers in my life, I never had relationships quite like that.
It's a hard question to answer. I'm going to tell you, it's a great question. Hard question to answer. I'll say this. I do believe that I have had this gift of welcoming people into my life. I do trust people until they give me a reason not to, and that's kind of a family mantra I grew up with. I grew up with a family that trusted. I grew up with a family that was curious, that we were always exploring things. So when people came into my life, I was fortunate that I never had a negative experience, Jeff, and I think that's what catapulted me forward. Had I had a really negative experience with somebody coming into my life who I thought was going to be something positive, but it turned out to be something bad in my formative years, it may have turned out differently for how I look at things today. But everybody who came into my life was so altruistic in what they were giving me. And part of it was my acceptance of it.
Right.
But part of it was when they gave it to me, Jeff, I ran with it. It was my promise that I was going to take what they were giving me, and I was going to go full throttle work ethic. I was going to be determined, and I was going to be resilient, and I was just going to keep fighting because I knew what they were giving me was special. I didn't take it for granted, and I think today so many things are taken for granted instead of really being nurtured and bear hugged. I felt like with my coaches, I was always getting a bear hug. They always took good care of me.
That's such a great story because, as you just said, in today's world, everybody has either a shortcut plan or you just can't trust the people that you're getting the information from because what do they want? And I hate that cynicism that's crept into really a beautiful story, which I think probably happens a lot more than we think it happens. We just hear about the other side so much. And you're from, an area of the country which maybe fosters some of that a little.
Well, I think the Midwest was a great place to grow up, and
Right.
I state that in the book because I grew up without a lot of pressure.
Right.
I was free to be a kid.
Mm-hmm.
I was free to explore. I played a lot of sports. I had a lot of good people around me. I really grew up in a good environment in a small town, a small college town in the Midwest. And that part was really, really good. I do think we also live in an age where I think it's easier to tell a negative story than it is to tell a positive story. And I do think there are more positive stories out there than what are being told. But the other part of it, Jeff, I really believe that if we're going to build trust, and I just did a workshop at Kansas State University's Davis School of Leadership Studies with juniors and seniors that are actually studying leadership, and I give them a lot of credit for making that investment in themselves as they get ready to enter the workforce. That how do you actually build trust in yourself? It's a willingness to do the mundane over and over and over again to have that self-confidence. That's what golf taught me. It's that willingness to hit 1,000 3-foot putts because
Right.
I can't finish the hole unless I can get the ball in the hole. So, it's that willingness to do the hard, mundane work. That's the essence of what it takes to build self-confidence.
That's great, and I'm sorry I got to end it on that, but that is absolutely the truth. How many people are willing to do that? I know that the famous stories of Ben Hogan, 200 shots a day of each club. I mean, who's going to do that? And are you willing to do that? Right.
People who want to chase greatness and find a better version of themselves every day.
Right. This has been Deborah Shard, former PGA champion, now the author of Trust, Understanding My Why. Deb, thanks for coming on the show again. Love it, love it, love it, love it. Got to have more of it.
Always a pleasure to be with you, Jeff.
Thanks, Deb. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, and thanks for listening to the show. Check us out on the Mortgage Voice podcast, Apple Podcasts, Google Music Play, wherever fine podcasts are heard. I can't say that word today, podcast. Why is that?
Try Spreaker.
Oh, yeah, Spreaker, exactly. Listen to us on Spreaker, another fine podcaster out there. We're on the Big 8, and anybody who knows podcasting will know that. I listen to podcasts. I'm an old guy. Young people listen to podcasts. There's all kinds of people out there talking about interesting things, and it's commercial-free. So when you go and listen, you can hear me all day long without listening to any commercials, and isn't that the best way to hear the show? Please leave us a review. It helps others find the show. We're also on YouTube, Jeff Barton, The Mortgage Voice. That is our channel. Subscribe to the channel and click on the little bell to get you notified every time we have a new show. And we have one each and every week. Should be one up when? Saturday? Is that when it is? Absolutely. Okay. Check us out on the Mortgage Voice website, www.themortgagevoice.com. And again, I'm Jeff Barton. Thank you for listening to the show. We're on 4 radio stations in California as well as in Nevada, and I'm really happy that we are doing that. We're going to look to try to get some more going as well as up the ampage on the TV show. You know, Daryl, I talked to a guy who said he might be able to place us in Nevada, but at the same time, he had some ideas about internet broadcasting of some of the TV stuff. So I know this is up your alley. The only reason I tell you now on air is because to get people excited that we're about ready to bust it open.
We are certainly doing that, and you've made great strides this year.
Yeah, excellent. Well, I always like to hear that. And anybody who's listening for the first time, I know we have some new people out there, different radio stations that we haven't been on before. We're on once a week, most places, sometimes 3 or 4 times a week, depending on the station and the airing of the show, but we try to inform as opposed to commercialize what we do. Malibu Funding, the company I work for, I am a loan officer. 79620 is the NMLS number of Malibu Funding, who sponsors the show each and every week. As I said, we've been doing it probably 5 or 6 years. We have hundreds of shows on our site, and topics vary from some of the things we're going to talk about today, which we have a guy coming in, Ryan Hughes from Equity Prime. He's going to talk to us about what they do. Equity Prime is a lender. They're in the mortgage space, and for companies that broker loans, this is a company that offers products, and he's going to talk a little bit about that with us, as well as Deborah Shard is also going to come on. I don't know if anyone remembers the LPGA back in the 80s, the 90s, and the early 2000s. Deb was a championship golfer who's just written a new book called Trust, Understanding Me, Understanding My Why. Very interesting book, interesting in how she has translated her professional experience in golf to leadership skills, and she'll talk about what she's doing now with that. As I said, we don't advertise us that much, but we do try to bring you some information that'll be useful when you go out there and try to get a mortgage or you're looking for real estate. Right now, in the real estate market, what do we have? We have a pretty oversaturated in terms of undersaturated market is what I'm trying to say. There's not enough housing out there to buy. However, in the article I just read about 2 hours ago, the article said that because the interest rates have really fallen through the floor, and I mean really, if you had heard previous segments on the show, the rates are so low, it has made real estate once again attractive. So who's buying? Who's out there buying right now? And what is the largest pool of buyers active in the marketplace? Now, we've been decrying on this show, and that's a fancy word for saying we don't like, millennials. Why do we say that? Because I'm an old curmudgeon, get off my lawn kind of guy, and these people are lazy and not buying houses. So that is a reverse currently in the statistics that I'm about to quote you. There is a whole group beyond baby boomers. What a shock, right? I know, but yeah, okay, boomer. That's what my son says. It's quite funny, actually. I've been saying that for years, that the boomers, the generation I belong to, we could have done better, could do more, and could really aid in many, many different areas rather than just, get off my lawn. But that's who we are, so that's the way it is. But in this large pool of buyers, and you may be listening to me thinking, I'm in that pool of buyers. Let's say you're below 35 years old. You're in a number of different geographic and demographic areas, right? You're young, you're business people, maybe you own your own business, maybe you work for a corporation, maybe you're looking to get into your first home and you're trying to figure out how to do that. There is, in terms of this huge population of people, they will be the next group which will carry the housing market and determine how we are, I guess, in the current market after the recession of 2008. We talked a lot about default rates, notice of defaults, people not paying their mortgage for a month or 2 months or 3 months, and what happens if, and the default rate, all that kind of stuff. Well, it has been so winnowed down to now we talk in bits of percentages that exists. And that's largely due to the fact that the economy's gotten better. But mostly younger people who get into the housing market tend to pay their bills, which is an excellent way to obviously build your real estate wealth, but to maintain this minuscule percentage of defaults on loans. The millennials are one group. Genzers, that's what it's calling them here, Genzers, younger generation than the millennials. Older generation millennials, Gen Yers, Gen Xers, younger boomers. Now, what's a younger boomer? 55?
I didn't know there was.
That's a delineation of the big boomers.
That's right.
Okay.
They're called cougars.
Yeah. Oh, maybe. And what's a male cougar? A mooger?
Yeah.
Maybe. I don't even know. Anyway, this group, very good, but in terms of payment, but very eager to purchase. And it's the first time we've seen numbers of this particular large group say, hey, we want in, we want to buy. And people who have bought are willing to be sellers as well. Usually in markets in real estate, there's a cycle when you get into it. You buy young into a place you can afford. In the worst neighborhood, you try to get the best house. I mean, that's always the philosophy, especially for first-time buyers. Then those people sell that property, get into the next door, step up. Some people call it when you have kids property, right? You need a bigger place, maybe need some yard, maybe better school system. So you're looking for different things. You're not just looking to get into the market, but you're looking to parlay what you have into something that you really want to live and raise your children in. And then, of course, when you get older, you sell that big house and you get into something more comfortable. Now, in each stage, historically, you've been able to step up financially because you're doing better. Most people who get their initial first jobs, they struggle, but they put together some money and they get a loan and you buy something. Then a few years later, you're more stable, you're making more money, then you buy something, or you get married and both incomes are ready to contribute to the step-up market. And then later when you retire, you've paid off your house, usually pretty close to paying it off, and you're ready to use that amount of money to buy your next house and then put that amount of money into some either residual income property or to be able to put it in the bank or save it for a rainy day. So in all of these areas, what we're seeing right now in this large pool of millennial and younger borrowers, younger buyers, is that there's a great vast number of them who want to get into the market. And those people who are already in the market want to sell and step up to the next property. This is a traditional model which has taken some time for this particular large group of borrowers and buyers to get into. We're really happy to see that because what it means is that the traditional models of selling, buying, and getting loans is still effective in this particular market. And because we have rates, which I say start at 2.75% and 3% as a conventional loan, 30-year conventional, Unbelievable has allowed that group of young borrowers to once again look at property which may have been out of their price range 6 months ago, but because rates have dropped, it means that the money in, the down payment is less, and because the rates have dropped, it means that your monthly principal, interest, taxes, and insurance, that's also dropped, and that's a good thing. Anyway, I'm Jeff Barton. Thanks for listening, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.